Let me welcome on board Nooresh Merani as well as Kush Bohra to talk about what they're making of the market right now. Nooresh, hi, afternoon. Seems back on track, a good amount of recovery from the session lows. What's next on the cards?
So very interesting recovery on the indices, specifically Nifty, and we are seeing a good recovery in the heavyweights in a big way. So now we need to watch out for whether we can go towards that 18,900 mark. We are seeing some bit of a recovery in ICICI Bank, HDFC Bank, Reliance Industries. So the bias is positive. It actually today's recovery makes it a trade wherein you keep a stop loss at today's low and go for a long position. So bias is positive on the Nifty, and overall the broader markets continue to be in the same momentum, slow and steady upticks. So for now, watching out for say if we can see a reversal in banking space, that could be the critical point whether HDFC, Kotak, ICICI can do well.
Okay, let's see what happens because the Nifty Bank, as you pointed out, has turned favorable. It's the heavyweight like Axis Bank as well as SBI, which are considerably off the lowest point of the trading session, and hence that move in the Nifty Bank as well. But Anshul, wanted your take, which is that sector which is, very high conviction buy at this point of time, barring financials. If you can, probably talk to us about the broader markets theme, which is that sector which comes in as a high conviction buy?
In our judgment, over the last 6-7 years, Pharma has actually gone nowhere, and all the negatives that this sector has seen, both in terms of volume contraction as also prices coming down, particularly in the export market, those have played out in stock prices. This looks like a bottom formation in this space, and maybe from here, risk reward is quite favorable. And in a period of say 2 to 3 years from here, unlikely that you will lose money, quite likely that you will make money.
Just looking at some of the other buzzers in trade and look at HDFC AMC as well as HDFC Life. Interesting to note the kind of recovery that you've actually made from HDFC AMC. In fact, it's recouped all of its budget time losses, and I think the stock is back at its 52-week high, if I'm not mistaken, currently holding up about almost 8.5% in the green as we speak right now. That's, of course, HDFC AMC. HDFC Life is the one which has recovered its budget time losses, 2.6% higher on the futures as we speak right now. Anshul, clearly renewed interest in the entire insurance space. Wanted to get your thoughts in here.
Again, this is a space which has, for the last few years, consolidated quite significantly. Some of it is also because of the upheaval that we saw because of COVID, and then valuations kind of factoring in most of the upsides. After this consolidation, clearly this is a space where there is secular growth in the country. The penetration is quite low. And from here to the next few years, there is going to be significant volume growth, as is widely accepted by the street. Now that valuations have consolidated, and we are seeing regulatory uncertainty also in prices today, it looks like from here there may be individual opportunities in this pocket, and one should take advantage of that.
There are a lot of individual opportunities if you want to take advantage of that. But let's take stock of what's happening in terms of the other price volume buzzers as well. Piramal Enterprises is one stock I wanted to flag out. That's seen an up move of around 5 to 6%. It's seen a breakout from the upward sloping resistance pattern, surpassed the 200-day moving average, and the volumes too are towards the heavier side, almost 4x of what we have seen over the last 20 days. Container Corp, on the other hand, is seeing a bit of a breakdown. It's formed a bearish engulfing candlestick pattern and has managed to snap the 4-session streak of forming higher lows. So Concor is in focus on account of that. And then Z Entertainment, which is managed to hit a fresh 52-week low on an intraday basis. In fact, it's back at the 2021 lows now, had seen a sudden knock of 5 to 6%, and the volume to 2x of the 10-day average. Kush, wanted your take regarding some of the buzzers, whether Piramal Enterprises, Concor, Z. Would you be a buyer in any of these names at lower levels, or any chart that looks interesting to you?
So Piramal does for sure. We know it's coming off a very long slump, but the kind of move that we've seen, let's say somewhere around end of March, the recovery is gradual. It's not one of those stocks that has a breakaway rally and just gives those wild swings. But slowly but surely, 650 is where it formed its base, and now it's almost about that 830, 850 odd levels. So I think this is this is a stock that someone could enter into, but from a positional perspective. There was a resistance at around 800, 820 odd levels. The stock has surpassed that today. It's also trading above its 200-day moving average after a very long time, back of very good volumes. So I think this is one stock that could go higher from here. For a fresh entry, I would actually look at 875 and 925 kind of levels on this in the coming months, and a stop loss here would be just under the 800 mark, which is about 790 odd. Z is one stock, given everything that's happening around it, I would very clearly avoid, even short I would avoid for now, because it's very close to its base of 175, 170 kind of levels. So that's a very clear avoid even from a technical standpoint. And as far as Concor goes, well, we've been seeing some kind of recovery in this, but it's failed, and it's meeting resistance around the 680 mark where the 200-day moving average lies. So from all the three stocks, the only one that really looks good on the charts is Piramal Enterprises.
Well, how can we not talk about Tata Motors, which is currently at a 7-year high? There's clearly some renewed activity on Tata Motors. And it's quite interesting, Anshul, given that last year was all about M&M and TVS's outperformance, and now newer names are joining the fray. Just wanted to understand what's your leaning within the auto pack.
Yeah, within the auto pack, we think that it's very clear that passenger vehicle space doesn't have the risk of EVs coming in and making the whole space obsolete immediately. Some of that risk exists in the two-wheeler space, which is why passenger vehicles are better placed. Within passenger vehicles, again, there is a very definite trend which has played out over the last few years, which is that consumers are moving towards SUVs. So companies which have SUVs and have a foot in the door there are benefiting. Some of the names that you mentioned benefited as a result last year. And some companies are getting their act together. And in the current year, they're getting new vehicles in that space. And it's likely that they'll gain a bit of market share as a result. So our preference is for passenger vehicles, and within that, companies which can cater to the SUV craze of the market in a sense. Also, the commercial vehicle space is quite attractive at this time. We see volume tailwinds as also margin triggers in this space. Raw material prices have come off. The shift is happening from LCVs to HCVs. HCVs, as we all know, are higher margin products. And so even there is attractive opportunities available.
As a result of that, Subros as well as Amber Enterprises, those are the stocks in focus. Subros, of course, is locked in upper circuit. It has almost 45% market share. Amber Enterprises has a very small, insignificant portion right now coming in from this space. But nonetheless, that stock is soaring away in the trading session, 9% higher. The other stock that I want to discuss with you, Nooresh, is HCL Tech. Very surprisingly, that stock is sitting at a 52-week high at this point of time, because rest of the IT peers and especially the large cap names are nowhere near the life high levels. And then, of course, the one that we pointed out, Amber as well as Jamna Auto. From these three stocks, Amber, Jamna Auto as well as HCL Tech, which are the stocks that you would recommend?
So I would start with HCL Tech. That is the one which has given a breakout today. Now, if you look at what happened with the IT pack is the whole IT sector topped out somewhere in the end of 2021 to 2022 start. And post that, we saw a sharp fall. And from those levels, there was a recovery in September till November, December. And then we again saw a drift lower. By March, many of the large cap names came back to the same prices. In mid caps also, a lot of these names came back to same prices. The ones which did not became relative outperformers over the last few months. And in that case, if you look at HCL Tech, that is the one which made a similar formation. The stock went to 900 and then recovered back to 1150. But in this dip, it did not go even towards 1000 levels. And now 1150, which was a price point for the last 4 months, which was a high, hit almost 6-7 times in this period, has been taken out today. a clean cup and handle breakout. So if this works out, it could go all the way to 1300, 1350 as well. So HCL Tech looks interesting. Jamna Auto is a case in point wherein there has been a huge block deal today. So could be a one-day price action, but 95 has been a very strong support for the stock for the last 1 year, and 110 is a resistance. If it sustains 110, that could be a breakout. So for now, it's more like a one-day deal effect.
That's about Jamna Auto, but Anshul, what's your take about the IT pack? Because it's been very, very divergent this year with respect to how large cap versus mid cap and small cap IT has really performed. What's your view as a house? Are you more positive towards mid cap IT or completely staying away?
Actually, this space one will have to look at on a stock by stock basis. I don't think there is a definite trend sector wide, the kinds that we saw in the year 2020 and 2021. The reason I say that is because even after the recent correction, this sector trades at premiums to their 10-year average valuations. So valuations haven't really adjusted, particularly of the large cap names, to levels of where they used to trade before COVID. As a result, this sector, although having said that, I must say that there are opportunities which are stock specific. So this sector does offer opportunities, but I don't see a trend which is sector wide. As you may have seen, some of the names that you're flashing on the screen, some of those names have done very well in recent times, while many of the large cap heavyweights have actually consolidated. That tells you that this is a stock pickers sector for the moment, and that's the trend we anticipate for the rest of the year as well.
That's the take coming in as far as the IT sector is concerned. But on that note, slipping to a very short break with the news that it's just around the flat line for the market, so it could go either way.